Axel Merck from the Merck Hard Currency Fund. Will the Eurozone stay together?
We think it really doesn't matter. The euro will thrive in a backdrop of a lot of pain. And indeed, we do think Greece will default on its debt at some point. But it's in their interest to stay in the Eurozone because they get cheap money. If they were to leave, it's really their problem. They would fall into chaos, hyperinflation. The rest of the Eurozone will have a lot of pain on the backdrop of a stronger euro, we believe.
But what about the domino effect? Right now we've been hearing about Italy. Before it was what happens if Spain has problems. Now everyone's talking about Italy.
Yes, by all means. You've seen in Italy 3 times in a row now, the parliament has been able to pull off very severe decisions in a very short period of time. Italy is not like Greece. Italy can get its act together, even though the government looks a bit choppy. They are able to engage in real reform. It is possible to come down from a major deficit. Look at Belgium. In the mid-90s, a deficit of 130% to GDP. Now it's under 100%. Obviously, some big challenges, but the structure of the debt is such that it's a very long-term debt that Italy has. They can get through this, and yes, it's going to be very tough for them.
Everyone's talking about Germany and France as the pillars of Europe. Is France okay? They own a lot of Greek debt.
Good question. We are more concerned about France than many others are, and France has been lagging in its reform process a little bit. Remember, it's the bond market that's dictating the terms. If the bond market gives the government an indication they would need to engage in reform, the governments follow suit. And so does France, so does Italy, so does Spain. And if they're lagging, well, it's only to their own loss. The pain will last longer. To regain confidence, a lot of reform has to be implemented. It doesn't mean things will go fine in the Eurozone anytime soon, but it is because of this pain, because less money is being spent and printed in the Eurozone than in the US, that the euro will be stronger, while at the same time the pain will persist. This is a process. There's no silver bullet.
Speaking of strength, the Swiss franc has really been strengthening, but they've capped it. What do you think about this move?
Well, we have been reducing and almost eliminating our Swiss franc position in recent weeks ahead of this move based on valuation. It's when something appears to be a risk-free trade, like the Swiss franc zooming up, at some point something has to come in the way. Just as when the euro was going down to 118 last year, it appeared to be a risk-free trade. At some point, sanity came back into the market and things moved back. Now, obviously, this is a very daring, risky move. We utterly disagree with the move, but we have to live with reality. We have moved on from the Swiss franc. We may go back there at some point if and when it appears that the willingness to pursue this peg or this one-sided peg is going to ease up.
Putting it all together, do traders, investors, does anybody want to hold the euro right now?
There is no such thing as a safe asset anymore, and investors may want to take a diversified approach to something as mundane as cash. We have been buying the euro. There is blood in the street, as some people say. There is value. There are other currencies we like. We like Sweden, we like Australia. The challenge is everybody else likes it too. The euro is one of the less volatile currencies. There's a lot of catching up the euro has to do whenever they do one step in the right direction. But it is risky, just as everything else, just as the US dollar is risky as well.